Now, Brad mentioned before Goldman Sachs. Goldman Sachs also making another interesting call. They have lowered their earnings estimates for the S&P 500 for the rest of the year, as well as 2023 and 2024, citing that margins have inflected downwards. Now, they do give a couple key call-outs here, Brad. They do think, lower energy prices will help a lot of companies. Also, maybe less currency risk next year will be helpful, but still a big call by Goldman Sachs here.
Yeah, and looking through the margins, they actually expect that to exclude energy. But 86 basis point contraction is what they're looking for in 2022. And then in 2023, 50 basis points and returning to pre-pandemic 2019 levels of 11.3%. Now, what does all of this mean in context? And this is something that we've been discussing here, at least having more kind of rigorous conversation about, is that margin contraction and what that actually looks like in action. It looks like what we were just talking about with Meta. It looks like some of the layoffs. It looks like trimming where you are able to produce, or at least moving around supply chain partners as well, because of the costs that you're taking on. And within those margins, you're seeing higher expenses, both on the headcount front and then additionally on where you're able to actually get materials and supplies to build out products. And I think Goldman Sachs directly pointing to that, especially within some of the technology companies, whether it be consumer tech or whether it be in cloud tech, where some of the demand that's been pulled forward so drastically has begun to dry up, and the companies themselves have to recognize that and try to spur even more of that, or have more demand generation efforts that would actually prove more portfolio clients to take on their products at a time where they're tightening their own spends as well within corporations.
And what are they preparing for, Brad? A potential recession. That's another little nugget or nuance in this Goldman note. Noting that, and I follow Goldman notes very carefully, they now see a 35% chance of a recession next year. That's up from 33%. So tiny, just small thing. I have no life. I just read a lot of these Goldman notes, so I noticed that nuance. But they say in a recession, they see S&P 500 EPS falling by 11% if we do, in fact, get a recession. They see a mild one, but still, that earnings plunge, double digits. Wow, that's not priced in this market.
I know you. That's a lie. I know you do have a life because you were going on a nice cruise.
I did go on a cruise yesterday.
Over the weekend.
I did go, but I was also checking the finance news on the Yahoo Finance app at the same time.
But you know what? In a recessionary period, that's...
In a recessionary period, I'm selling my car.
Wait, you were driving and doing that at the same time.
No, I have two eyes.
Okay. Yeah. All right, but... Here's the thing. A lot of people might lean into that
you got
in the time of a recession.
I'm going to wait for you to give me an opening on the Spirit Yellow Planes. You just wait.
No,
just wait.
Not at all. Never. We don't need to bring that up in this show. Not on this desk.
You just wait.
But that's what a lot of people might be doing in the face of a recession. They might look for the cheap activities or the activities that they can lean into what they
That wasn't being cheap. It cost me like $60 to fill in my car and go on that cruise. That's not cheap.
Well, that's an expensive. That's expensive. Yeah. But I mean, at the same time, that's just kind of in the recessionary environment that we may be, and households, quite frankly, are bracing for themselves. Where does the spending start to be contracting even more? Even if consumer discretionary, you could take a look at consumer discretionary chart over the course of this year. That already mirrors how much investors are pricing in the consumers actually pulling back some of their disposable income on everything from retail and apparel all the way out to vehicles and cars. And that perhaps a little bit more of a necessity depending upon where you live. But at the same time, people aren't going out and buying an extra house anymore. People aren't going out and buying 14 pairs of shoes. They might buy 2 that they need, and that's it.
Yeah.
So for people who are going for a nice ride in their cars.
Well, I was also $70 into brunch. So this was like about $135 cruise on Sunday. I'm just saying there. That's what I'm saying.
Well spent.
Thank you. Well, yeah, actually, yeah.
I'm glad you enjoyed your Daylight Saving Sunday, everybody.